Hello, this is Patrick White from AA Commodities and Investments with your Sunday night, September 2nd market recap video here. We're just on the open here on Sunday night. We got corn down a cent at 368 and 3/4. We got November soybeans down 6.5 cents at 862.5, and D wheat's down 1/4 cent here at 462.5. I'm going to go ahead and get it started off with a disclaimer here. Just remember, everything I say is just my opinion, and there's no direct trade recommendations. If you'd like to read the full disclaimer, please pause the video now. All right, so as you can see here, we had a little bit of a lower opening. Not a whole lot of fireworks here on Sunday night. We did have a gap down in the soybean market, but other than that, it was pretty uneventful. Going into the markets here, well, I guess I better start off with looking at some weather. We had the 6 to 10 day outlook there. Kind of flipped to a lot warmer than when we went into on Friday. We had kind of a cooler, 6 to 10 day and 8 to 14 day forecast, but we're still, as you can see here for the Midwest, we're still forecast for higher than average rainfall there, and the 8 to 14 day goes along with that as well. We're hotter than average, much hotter for the south there, drier for the south as well, but still kind of the same, higher than normal precip. So if you look at the last 72 hours of rainfall here, Iowa and Illinois and parts of Nebraska got some pretty good rainfall in there. And obviously like the Eastern Corn Belt got some pretty good rainfall there. Texas and stuff for the cotton guys. They had some pretty spotty rains, certainly not a drought buster, and that'll be something to watch here with this drier forecast here over these next couple of weeks for cotton. So, jumping on into the charts here, really closed the week last week kind of on a down note for the corn market. Really got a lot going here on the 28th, had a nice push up higher on some short covering, and really it was unable to get really legs underneath the corn market here. So we're still keeping this support level in here at like 365, 364. I've got this support at 363 and 3/4. That's the contract low. That's kind of my level, but I think we're just inside of a range between 364 and 374 to 375, or at least that's what the market's been doing here these last few days. So, obviously like these, on the 29th and on the 30th, we found sellers at 374 plus, and we weren't able to get a close really, hard in one direction. And, the market's opening the week here a little bit lower, on just, weather, looks pretty darn good as far as crop maturity goes on here. We should, with these next 2 weeks of warmer temperatures, we should get a little bit of a better chance at having a better crop development. And it's well needed because the crop is far behind. So, with that being said here, I think we're between a 364, 374 range in the corn market. If we break either, we could break out, either to the higher side or to the lower side. If we break out, I expect a further move. If we break out a 64 or a 74 there, on into soybeans, we had a gap down here on the overnight. Really like your hourly chart shows it the best here, and really we just sold off since basically 10:30 hour on the 30th there, and we've just lost precipitously in the soybean market. What's been leading us lower has been the meal market, which is really not a very good sign. This 295 level that I've been watching, for a number of weeks here, if that drops, I guess we've tested that about 4 or 5 times. If that drops, we're probably headed down to like this 291 to 290 region. Traditionally, when the meal has gotten down there, like in 2016. Down to 290 and stuff, it has been bought back and rallied. But with that being said, it's leading the downside right now. It's leading soybeans down. And I think that's why we had the gap down here in the soybean market. Soybean oil is also lower here, but I kind of want to show you something. I guess we had a drive up to that 870 to 875 resistance level here on Friday, and we could not get buyers to close above it. So we're still inside the 6-day range between 870 and 855. Meal leading it lower is not a very good sign for the soybean market. So look for continued trade lower, possibly down to that 855 region. On the wheat side of things, we had just a really hard selling day on Friday. Wheat just really has been struggling to get good solid export sales from the U.S. Russia and the EU. They've had a really good crop this year, and just world supplies are up. On wheat I believe it's about 15 to 16%, and all those world markets and stuff, they're trying to vie for their own export sales and things like that. So what's been happening is world prices have been driven lower, and world export prices have been driven lower, and the U.S. is just following that. So right now we've got D wheat trying to hold the 460, we'll call it 460 low level here that we saw on the 21st of August. We got a close below there on Friday, and they're just trying to support it here at the 460 mark here on Sunday night. If we do break that, I expect us to go down to this 450, low 450s area, 450 to 453. And just there's just not a whole lot of bullish information out there as far as wheat goes. And when world supplies are higher and everybody's just in hard competition to get the cheapest wheat out there, the U.S. is typically not the not the country that's going to benefit from that type of scenario. We've also had a higher dollar, and also some of these other countries' currencies have gone lower too. So that really hasn't been a help either. So kind of the same old in the wheat market there. In cotton, we're continuing our sideways trading range here between $57.50 and $60. I guess this weekend, with that 6 to 10 and 8 to 14 day forecast, switching to hotter and drier for the state of Texas and specifically the Texas Panhandle, that could cast a bullish undertone. So far, the market on that, on the news of Texas being hot and dry, the market has only been able to chop sideways. It really hasn't been able to get a huge rally going. But with that being said, I think if we do get a rally going, you're going to want to be looking at the $60 mark. If we get a close above there, we can probably head up to the $62.50, $62.75 region. And I think, these next couple of weeks here will most likely do some damage to the cotton crop down there in Texas if these hot and dry forecasts continue. And if Texas continues to see this, spotty to light to no rain in some areas. So something definitely to watch. I guess the high supplies domestically and just the China trade war have kept the reaction to the hot and dry conditions in Texas, pretty mute. But, we'll see if the traders want to take that information and run with it this week. Over in livestock here, I'll just touch on this real quick. They're not open tonight. They'll be open at 8:30 tomorrow, normal time. But Friday we had a pretty bad day in the cattle market here. We tested higher, tested lower, really couldn't get anywhere. The close is about 87 cents lower at 98.92. We're still inside of a range here between $98 and this 101 mark. I think packer margins have been going down as cash has been bid up, and choice and selects have been going down as well. So packer margins, I believe I saw a report they're at like 383 instead of about 450 last week. So they're down about $70. So we'll see how aggressively the packers are going to bid this week. I would think they would still continue to bid because that's a pretty good packer margin here yet. But we'll see what they want to do with this market. As far as I'm concerned, we're going to range here between this 98 and 101 mark until we don't anymore. And then, they should flood to the one side of the breakout. On October hogs here, kind of an interesting week. This is all basically this rally since the 23rd of August has been all on China trade headlines and just the rumor of, the possibility of better exports if we are to get, trade headway, at least, with the Chinese. I think in the fourth quarter, they're really going to feel the squeeze as far as their protein supplies in China. And that's why you've seen, obviously, like the deferreds and stuff like December 19 on, they've done a lot better than the October contract as far as rallying goes. But with that being said, this near-term resistance mark of the 64.50 to 65 level has really kept hogs in so far. I think we're going to continue this range between 61.50 and 62 for support, and then 65. If we break out of this 65 here this week, we're probably headed up to this $68.70 mark, and if we break above there, we're headed up to the 70s. But it's going to take more, since we've got so much, higher supplies domestically and higher weights domestically in the U.S., it's going to take, the hope, at least, or the rumor of better China exports to get this market to rally significantly here. So I think no matter what, if there is a bull side of the story, it's going to be on trade for hogs, and if there's a bear side, it's going to be on continued, higher supplies. So that's about all I got here. If you guys have any questions, feel free to reach out to me at 712-262-7606 or visit our website at aa-commodities.com. And thanks for watching. Appreciate it.